Hey everyone, it's John Howell here again with you today, and I have a bit of a different video to go through today with you. It's actually a market update. And the reason why I want to give you a market update, because there's a lot of things happening in the actual market itself, and I actually believe there's some things that I need to show you, okay? And this video is filmed on the 12th, the 11th, and what I'm going to do is, I'm going to show you a few charts in just a minute, but in my last video, I promised to show you the HP technique, as in choosing high probability trades, okay? But with that HP technique, I'm going to show you in the next video, okay? So I did promise you this video, but I want to give you a bit of a market update first on the charts first, and then on the next video, I'm going to continue on with that technique, okay? So I promise I'll give you that. So, with the markets, what's happening with the markets right now? We have had a really nice run up. We've still continued to run up on the Nasdaq, on the Dow, the S&P. The Australian market has continued to go through the roof as well. Okay, so basically for the last couple of days we've had a nice bit of a pullback, and now we're coming to some really interesting areas, and I want to show you that. And what I want to show you today is I want to show you a smaller time frame chart on the S&P 500, and then I've got a really interesting pattern to show you on a monthly chart, blowing up on a bigger picture scale to show you the monthly chart itself. Okay, so what I'm going to do is I'm going to get my trusted advisor, my assistant, camera assistant, to zoom in on the charts, and what I'm going to do is I'm going to show you this particular chart first. This particular chart here is the Dow, okay? Okay, this is the Dow, sorry, no, this is the S&P. My apologies, this is the S&P. The Dow is the next chart I'm going to show you. So this is the S&P 500, and we've got 1, 2, 3, 4, 5, 6, 7, almost 8 months worth of data on here, okay? We've got a couple of moving averages on here as well. But the main thing I want to show you here is this. If you have a look at this, where the market is right now, we've had a massive run up right from September 10th. Okay, you can see this massive bull run just kept going up, sideways, and continued up. But look what's happening right now. We've had this major pullback right to this point right here, right, which is a major support level. But if you have a look at the particular level we're at, that is actually not one, not two, but 3 support levels if you're coming in. We have the high over here, which was in May 2010. That was actually resistance before we got a nice big crack down to the bottom of July 2010. Then we slowly picked back up to where we broke those highs right now, and you can see how we actually came back here, and now tested that high now, and has actually been support. You can see it's actually bouncing off support there. Not only that, but we have this trend line coming through here, and you can see it's actually going along all through there. You can see all the resistance point. Plus, what we have is we have this other trend line which starts here and actually works all the way up support through there. So right now we're at 3 support levels right now, and for the short term, I actually see a lot more upside for the short term, okay? So just keep an eye on that. The short term on the S&P does look like it's getting a nice support here, and it does look like for the short term at least, it's likely to get some upside. So that's the S&P. Now I want to show you, and as I promised, I want to talk to you about a longer term time frame chart on the Dow, and this is a monthly chart here. Okay, so that chart there was just for the short term. This might be for 1 or 2 or 3, and maybe for a week. What we're looking at here is what's likely to happen in the next couple of years. Okay, and I wanted to show you this because, as you know, I'm a big believer the market's likely to come down. The next 1 to 2 years, we're likely to see within that time frame, we're likely to see a nice big crack down. Okay, another big drop. So I wanted to show you this here because it's really interesting what's actually happening on this chart. One, what we actually have here is we have a chart going back from 81, okay, I know you might not be able to see that, but from 81 to where we are right now, getting into the end of 2010, November. So, so basically, with this particular Dow chart, you can see that we had a nice steady run up right to where we peaked at sort of 2000, and then we dropped down sort of to 2002, 2003. Then we picked right back up again, and we made the highs. We made a brand new high up here around about 2007 to 2008, and that's when we had the big credit crisis drop. Boom, all the way down there. Big, massive drop. The biggest drop, fastest drop we've ever seen in history, as we know. Then what happened, it got down to around the 6,000 level, found a really good support, and then rallied right back up to where we are right now. But I want to show you something what's actually happening here, which is quite interesting, and I want to bring your eyes to two things. One, the very first thing is, as you can see, with this run here, the recent run from basically from the bottom to where we are right now, see how vertical that is? It's just gone whooshka, straight back up. That vertical spells, to me, spells disaster long term. Okay, now we're talking a monthly chart here, remember, okay? A monthly chart here on what's happened long term time frame. But if we have a look at the bigger picture itself, the market's always telling us something. This here is actually, when you look at it, left shoulder, that is a head, and this here is a potential right shoulder on a monthly chart. Now, if that does prove to be a head and shoulder, this here is the neckline. The neckline is simply where we mark, as technical analysts, we mark the neckline to the head, and then we project that down through there. Now, as me as a technical analyst, if we actually do get this, turn this into a head and shoulder formation, and we do start to break those lows there, do you know how far the projection is? We're talking down around the 1,000 to 2,000 level. We're likely to get down there in the next couple of years. Okay, can you see how that's forming there? If we do not take out the highs at 13 to 14,000 on the Dow, this is going to turn into a head and shoulder, and then we're going to see that big crack. Fundamentally, the Fed and the government's pouring thousands and trillions of dollars in the government right now, especially what happened recently, right? We had a big, massive 200-point update on the Dow. Why? Because the government's still pumping money in there. That pumping money is going to give us probably, I reckon, I believe, another 2 or 3 or maybe 4 months upside. But this bigger picture here is saying, you know what? If we do not take out the Dow's highs at 13 to 14,000, I believe we're likely to see a lot more downside. Not because I think so, because the charts are actually showing this, okay? So please be careful. This is a chart that I really want to show you, because I keep saying to everyone, the jobs, the mortgages, the rates, okay? There's so many people out there still not in jobs. Like in the United States right now, there was over 8 million jobs lost in the credit crisis in the 2008 debacle, but there's only something like 900,000 that actually came back. Okay, so there's 8 million jobs lost to almost 900, maybe a million jobs gained again. Okay, what does that mean? That means they're not spending money. How does the government grow, or how does companies grow? How does the industry grow? How does the economy grow with all this happening here? Okay, so just keep that in mind. Okay, so that is finished. That's basically the chart segment over there. I just wanted to show you those. Those charts here, because it just speaks so many words to me, and I just had to show you, okay? Once again, this is just an alert and a warning to say, hey, short term, I see a little bit more upside. Long term, the next 1 or 2 years, please be protected. That's why I'm doing this video, okay? I want you to be protected. And everything we just spoke about there just a minute ago, about the jobs and all that sort of stuff, it's definitely a hard world out there. It's definitely a tough world out there. And when you start to see formations like this, not on a daily, not on a weekly, but on a monthly chart, that is speaking something. Now, as you know, in my last 2 videos, I've been saying, if you trade a day chart, then you need to be trading a what? A week. Then you need to be looking at the weekly chart for setups. Okay? You need to be looking at the weekly chart for setups. Now, what we're doing here is we're saying, okay, let's step back right back to the monthly chart, and let's actually see what's happening here. And what is happening? The head and shoulder potential is going to be there. If that does work out, we're likely to see a lot more downside. This is not to scare you. This is not to give you a fright or anything like that. What it is, it's just an alert. It's just a warning that what I'm seeing on the charts right now and what is happening in government right now is actually speaking both languages. Fundamentally, we're going to have a big crack. Okay, fundamentally, the whole economy is like that. Technically, on the longer term time frame, we're seeing that as well. Okay, so please be careful with this particular market. Please be careful with your trading. Again, if you're short-term trading, this doesn't matter anyway. But some of you guys have got long-term superannuation and stuff like that. Sometimes you got some of you guys have got long-term buy and holds. Hey, it might keep going up the next 2 or 3 months. I believe so. But the next 1 or 2 years, we're likely to see another big debacle. And especially with the technical analysis saying to us. So, okay guys, well, that's it for me. Just another market update for you guys. Next video, I'm going to show you the HP technique, and I've got a lot more techniques and tools to show you. So this is John here, signing off, and I'll speak to you next time.